The first number for Lowe's was, it's like people were like, whoa, what happened? But because it was like 25 cents. You factor it out, it's $3.27, and that is well above $3.10. Also, good sales number, 23.5 billion versus 23.1 was what expected. Comp store sales not as good as Home Depot, up 3%. U.S. Same store sales up 2.2%. And then we need to look into all the things that we were talking about yesterday. Inflation, obviously. People have traded down with Walmart and buying, and companies are trying to hold the line, but not really as much as they can to try and maintain some margins, but obviously trying to get some market share as well. I thought
the guidance is important, too. They do say that their comp store sales, they see them for the full year being flat to down 1%. So you're talking about declining comp store sales. Yeah. There's some pressure that comes with that. They also see, though, full-year gross margin rate up slightly compared to a year ago numbers on this. They're raising their guidance, but it really looks like it's just taking into effect the 17-cent beat that they have right now. They're now saying 365 to 380 for the full year on an adjusted basis. The street was already at 354. If you take 354 and add 17, that gets you to 371. Yeah,
the sales number's higher, guiding to, 97 to 98. In the number, 96.96 was the, so 97, that's more or less in line as well. Joining us now is Brian Nagel, a senior equity research analyst at Oppenheimer. So what's the difference in the same store sales and the comp sales? Why was Home Depot so much better than Lowe's? And is that a good number for Lowe's as far as expectations, the 3%?
Well, good morning. So I'll answer your second question first. I mean, look, that is a good number. 3% is, I think, better than people were expecting. We had modeled kind of a 0 to 2, so it is a good number for Lowe's. But once again, we see, and this has been a trend for a very long time, where Home Depot, what we call outcomps Lowe's. And there's not a lot of factors in there. I mean, I think Home Depot still has better store locations. To a certain extent, they're better merchants, et cetera. But in and of itself, that 3% comp is a good number for Lowe's.
Yeah, that's the U.S. was 3%. So total was 2.2. You said the expectation was for 0 to 2. So that's actually outperforming. How about the effect of the inflation that we saw with Home Depot yesterday, where people were spending more because things cost more, but fewer visits or fewer transactions?
Well, it's a similar type dynamic at Lowe's. We spent a lot of time yesterday on the Home Depot conference call. I spoke to management afterwards, and again, that's a trend that's been in place for a while. Now, you can look at that as a positive or negative. On the positive side, what it suggests is Home Depot, and this will be true for Lowe's as well, continues to very successfully, strategically pass along these higher costs to consumers, and in and of itself, that's a sales driver. Now, the other factor at play here, and I think this gets lost in these numbers, is that these companies, both of them, Home Depot and Lowe's, are, generally speaking, selling more bigger ticket items. So that also drives up that ticket, so to say, while traffic to the stores is modestly down year on year. Again, I tend to view that as more of a positive.
And in terms of, yesterday we saw the PPI, which was a little cooler than expected. So do you need to see mortgage rates ease, or these are still stocks that are immune to when the housing market is bad? Do people remodel when they don't move? Is that what we're still supposed to think with Lowe's as well as we do with Home Depot?
Look, I think that's exactly the situation. I mean, we were talking about this yesterday. I mean, I believe that right in this environment, we're in this very interesting dynamic where, yes, mortgage rates have climbed significantly. That has impacted demand for new homes. We're seeing that in the home sales data. But on the other side of this, despite all these concerns right now about a weakening consumer, generally speaking, underlying consumer confidence still remains quite good. So what you're seeing right now is that, yes, homeowners are less likely to move to a new home, but they're more likely to put money back into their existing home. And that's very much a benefit for this home improvement sector. I think we're seeing that in Lowe's numbers. We saw that in Home Depot's numbers yesterday. Now, that could change. If we did go into a weaker economic environment, that dynamic could change. But right now, I think this is very much a positive.